Hey everyone, today we're going to talk about some macroeconomic topics that will have a significant impact on the future decision of the market. The first is that 9 large companies filed for bankruptcy in the US last week. This brings the 3-week average to 6, the highest rate since the 2020 pandemic. This means at least 18 companies with liabilities at or above 50 million have gone bankrupt over the last 3 weeks. In the past, only the brief post-2001 recession period and the 2008 financial crisis and the 2020 pandemic saw a higher rate of large bankruptcies. To put this into the perspective, the peak this century was a 3-week average of 9 seen in 2009. This bankruptcy wave is accelerating. Before jump to the other topics, let's check the Bitcoin ETFs first. We are still witnessing outflows from the ETFs. From February 2nd until now, we have had the 3 consecutive days of heavy outflows and followed by 3 days of very small inflows. This has little impact on the market trend and cannot prevent further declines in the market. This chart is showing that the ratio of technology stocks to non-technology stocks has reached levels similar to the dot-com bubble right now. This ratio has reached 2, and many people are issuing warnings. One key difference compared to the dot-com bubble is that today's technology companies are generating over $300 billion in annual profits, whereas during the dot-com bubble there was virtually no profitability. However, when small businesses are going bankrupt and even large companies and major corporations are facing bankruptcy, it suggests that a similar scenario could be unfolding again. And another topic, Kyungju, the CEO of the crypto count, tweeted that world uncertainty index reached an all-time high. If you feel everything is uncertain, trust that feeling. Yes, that is true. We have reached the highest level ever recorded on this index. Geopolitical risks, supply chain disruption, tariff wars, contractionary fiscal policies due to fears of war in the Middle East, rising energy prices, and artificial intelligence are all connected to this chart. That's why in the past few videos I showed data indicating that most investors are moving into the low risk stocks in the consumer staples sector and precious metals because of the existing risks, especially supply chain disruptions. They have shifted toward precious metals such as gold, silver, and copper, as well as other metals that are highly used in the various industries. For this reason, I believe gold is likely to continue its upward trend. High uncertainty affects investors. Companies pause their projects because they don't know what will happen in the future. It also creates a delay or hesitation in the Federal Reserve policies. It may not necessarily mean an economic crisis, but it makes decision making harder for investors and companies, leading them to reduce risk. If they choose to invest, they tend to move toward lower risk assets. Because of uncertainty in the world, I read an article in the Cointelegraph about the Bitcoin said that Because of uncertainty in the world, I read the article in Cointelegraph about the Bitcoin and said that Bitcoin price crumbled back toward its 2026 low as a lack of fresh capital inflows, weak investor sentiment, and rising selling in the spot markets chipped away at the 66,000 level. And the Coinbase premium is still negative. If you see that, we are still negative. When global risk reached their peak, investors become much more cautious with their buying decisions, or in many cases, they avoid buying altogether and reduce their risk exposure as much as possible. Let's check 3 on-chain data. The first one is the short-term holder MVRV ratio momentum. I still believe that on this on-chain index, we are currently at a similar position to where we were in the previous cycle, like here. We are like here. Even the trend had started moving upward, like here, start to moving upward. We were still declining, but the downside volatility was decreasing, and signs of weakness in the corrective trend were visible until the histogram turned green, like here. We turned green. That's when the trend reversal occurred. Let's jump to another on-chain. The short-term holder cost basis change. If you look at this data, we are just at the beginning of a bear market. As you can see, we still have plenty of time for further price correction and for our purple cloud to move lower. Like we are like here, we could go lower, our purple cloud. When a trend reversal happens, the end of the bear market, like here, it will be clearly visible on the cloud, just like in the previous cycle. In bearish market, whenever we drop below the short-term holder cost basis, I mean this one, each rejection from that moving average leads to further declines. If you look at the previous cycle, whenever we drop below the short-term holder cost basis moving average, each rejection from that moving average leads to further declines. Right now, we are at this point. The short-term holder cost basis moving average is currently around 91k. You can see that, 91k. Similar to the previous cycle, like here. The market may start forming a ranging zone over time, allowing the cost basis to move lower, and then the next leg down could occur. If you like this video, please give the video a thumbs up and subscribe to the channel.